That spread breaks out. We set the clock. And I'm arguing that probably in the next couple of quarters, remember the copper move and the lead move, and there's plenty of other markets that have done that. I expect silver maybe be $200. That fast. And people are looking for normality. Like, we go up 4 steps and pull back 2. Go up 3, pull back 1. All that nonsense. The norms will be shattered. And you'll go into a new reality. But as far as I'm concerned, just as the U.S. government and their central bank, just like the EU and Japan, don't control reality. So even if they set a price, I don't care. It doesn't mean it's going to stop there. Okay? They don't fix price. They may try to. I mean, there's some solid arguments that they've been manipulating silver. We need to get onto that too. And capped it off for the last 50 years. Well, copper and lead have quadrupled. I'll get into that in a second. And suddenly I think silver is about to leave and overrun that attempt to control the price of silver. And we know some of the big banks have been manipulating silver. In fact, there's been a couple actual criminal convictions in that regard. But if you want to, we can get on to that next subject. And you've got the spread chart of silver versus gold.
Silver versus gold.
Yeah. Okay. Now,
what's happening here?
This only goes back to 2020. Okay. So 5 years. We know in early 2020 into late 2020 and early 21, silver exploded in price. And therefore, the spread chart showing an ounce of silver divided into an ounce of gold was under 1% then. It was under 0.9%. Divide an ounce of silver, an ounce of gold. It shot up to over 1.5%. That's a huge percent gain. It's like buying a stock at under $9 and it goes over 15. Did it in like 6 months. These are weekly readings here, by the way, week to week. But then since 2021, when silver was over 1.5%, which is still dirt cheap historically, silver to gold, it eroded. Now, price of silver is going up since 2020. We know that. 2020 was 30. We're now, $52, 53. So it's gone up, but its performance versus gold has eroded, meaning it's not gone up as much as gold from that point to the current level. Now, you'll notice since about March of this year, that thing exploded back up again. So silver's been outperforming gold for the last half a dozen months or so, gaining. But there's a green line on that top chart, the spread chart. If you can clear that line, this spread breaks out, and that line goes back over 3 years. Ceiling, ceiling, ceiling. It's called what you call a base, okay? You break out over that, it's a fresh buy signal, meaning time to buy silver rather than gold. Doesn't mean gold's going down, just means silver's going to beat it. So if you have the combination of that first chart, gold breaking out versus the S&P, what it's telling you is you want to be in monetary metals, not the stock market bubble. This chart says you not only want to be in monetary metals, you want to be in silver as opposed to gold, because it's going to beat gold. I'm strongly of the assessment that when that first chart breaks out, gold versus S&P, as I said, it's already broken out versus the broader stock market indices. Silver's going to break out versus gold. And already this spread chart doesn't show where it is right now. It's up. It's moving up toward that green line right now. This chart's a week or so old, and we know a lot has happened in the last week. So that's another spread I'd watch, because it's not only telling you monetary metals are a place to be, but now you really want to focus on silver. Now, where might it go? If you go back 50 years and measure the peak point of where silver was versus gold each of those years, what was the highest rate, percent level, ounce of silver? 20 of those 50 years, it was at 2%. Some of those years weren't even bull years. In fact, the bull years, 1980, 2010, 11, silver was up to 3.5% and more, the price of gold. But just routinely, 2% is not uncommon, 20 out of 50 years. Well, heck, right now you're at 1.27% as we speak. If it went to 2%, just a norm, well, that's a huge move. That's almost a doubling of the price of silver in relation to gold. So anyway, this is an area where I'm mostly focused personally in my investments, and they're exposed at the end of each report. I disclaim what I own. All my emphasis is in silver, sometimes silver calls, silver miners.
And so,
This sort of reflects what you saw on the silver gold chart. Back in 2020, you had this surge where the silver miners beat the gold miners. It's like buying a stock at about $96 and it goes to 135 in 6 months. The spread went from about 96% to about 135. Divide the price of SIL, the miners ETF, into the price of GDX, which, by the way, does hold some silver miners, but it's primarily gold miners. But since then, even though SIL and GDX are now above, have advanced, and they're above that 2020 price high, the spread is not, meaning the silver miners have sort of gone sideways on the spread chart back to 2022. I've got a little black line there on the top chart, horizontal line that shows that they've oscillated either side of sideways since 2022. So for 3 years, basically the silver miners haven't really underperformed, but they haven't outperformed. But there's a structure, that green line, that's been hit 4 times since 2022. So it's a clear structure. You close a month out above that green line, and right now we're pushing to do it, the current levels reading of silver versus GDX, then not only is silver breaking out versus gold, but the silver miners are saying, I'm breaking out versus the gold miners, which would echo what we're arguing is likely to be the case, silver versus gold. So my emphasis among the miners now is to buy silver miners as opposed to gold miners. I think they've got a lot more to go on the upside.
I want to get your perspective on when we look at momentum, and obviously different factors drive momentum. And right now, the silver mining output has been in the deficit for the past number of years. We've had silver come out as was put on a critical minerals list by the United States government. And so what's your perspective on like these fundamental factors and how that interacts with the momentum?
Well, as you know, and I know, silver's had a supply-demand deficit for 5 years, and yet everybody ignores it, okay? And we know that silver is no longer used in photography. It's used in solar panel production, which comes from China primarily, about 80-90%. And it's in high demand globally, and it's growing annually, especially in countries like Africa that don't have major power systems, and therefore solar power is very important. So there's a great rising demand worldwide for solar panels. It's also used in high tech, in AI and so forth, in microscopic forms, yet it's pervasive. It's an essential conductor. So demand for silver as an industrial metal has been already in a supply-demand deficit, yet silver hasn't responded. It's still stuck in that range of 50 years ago. Well, it's slightly out of it right now, but how come silver's been in that range? And let me comment on that for a second. We went back and studied, and we could have thrown darts at many commodities, but I threw them at copper and lead, okay? And I went back to the late 70s, 80s, 2000 to the present. And in fact, I got the charts from the Federal Reserve of St. Louis. They have a base metal price charts. And there was a range, a reality for copper price or for lead price from the 70s, 80s, 90s into mid 2005, 2006, and 7, where they were stuck in this multi-decade range, just like silver's been in this 50 to under $10 range, back and forth, but for 50 years. Copper in 2005 and 2006 broke up out of that price range, and literally in a couple quarters quadrupled in price. Oh yeah, it had a hard sell-off after that, but it never went back to the old reality. Instead, the average price for the recent decades has been what? 4 times the price of the prior decade. Look at lead, same story, different year, happened in 2007, broke out of its little quiet reality, quadrupled in price, actually more, in a matter of a couple quarters, and lived in a new reality. How come silver's still stuck, or has been stuck, for 50 years? Gold hasn't done that. Gold's continually made dramatically higher highs at each move, but silver's been capped. Well, one argument is, and it's got backing, is that banks, probably backed by the Fed or encouraged, have been trying to control silver price. Ultimately, that kind of manipulation doesn't work. Reality takes over. And sometimes when you compress something like that, all you've done is make it explode even more. when it unleashes. So good luck, guys. I think we're on the cusp of that right now. And I think silver is about to do something. And we see it in the technicals. I see it in the spread relationship. That's why I'm watching gold S&P, moving into monetary metals. So this industrial aspect you mentioned, yes, it's a factor. But ultimately, there's bigger factors. And it's the movement in asset classes into monetary metals because of the perceived, and I think will show itself very soon, actual vulnerability of the stock market, especially the U.S. stock market.
Yeah. Okay. So some folks would, argue that, okay, we're going to get a sell off. People are going to need liquidity, and they have these price targets set at, 3,200 on gold, or they may get back into silver at, $34, $35, whatever the case may be. Right.
Yeah.
And I'm kind of wondering, if those price levels, we've already surpassed them. Like, are we going back?
No.
Could we go back to those price levels or what?
We're on the cusp of a major reality, a new reality for silver. And I'm arguing it's highly likely to happen. First off, if that spread chart I showed is silver versus gold with that ceiling goes back over 3 years. Boom, boom, boom. When you break out over that, same spread chart event occurred 5 months before silver reached $50 in 1980. It moved from the 20s, from the 15 level, I think it was. It's like a quadrupling in price of silver in 5 months. And the only technical we can find that said it's about to begin was not the bull trend in silver. It had already been going on. It had been going up for years. Suddenly it went electric. That spread broke out. 2010 and 11, silver had already been going up since 2000, 2001. And in 2010, in September, through April 2011, silver went up in that 7-month period, double and a half. Bam, the spread broke out first. That spread breaks out, we set the clock. And I'm arguing that probably in the next couple of quarters, remember the copper move and the lead move, and there's plenty of other markets that have done that. I expect silver to maybe be $200. That fast. And people are looking for normality. Like, we go up 4 steps and pull back 2. Go up 3, pull back 1. All that nonsense. The norms will be shattered. And you'll go into a new reality. And yeah, you'll get a sell-off at some point, but it's likely to be in a reality that possibly even overshoots what a real price conversion of silver would be, factoring in the decay in the value of the money unit, the dollar. Not versus other currencies, but its real value, the quantity of dollars, the M2 chart, which is, goes up about 90% in supply every decade. Okay. And so being $200 might just remotely match the 1980 high. So, and I expect it to happen very quickly. And frankly, if you're not there, you're going to miss it. But don't use the normal tools. They won't work.